News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moskow.
Karen, the global sell-off follows the announcement that Wall Street and the world had been waiting for weeks. President Trump is raising tariffs around the world on a day he has dubbed Liberation Day for America.
April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again.
In remarks from the White House Rose Garden heard here on Bloomberg, the president announced at least a 10% tariff on all exporters to the U.S. About 60 nations will see even higher duties. The biggest target of all is China. The president says Beijing charges the U.S. an effective 67% rate.
So 67%, so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset?
President Trump is also slapping higher duties on the European Union, Japan, Vietnam, and more. Altogether, Bloomberg Economics estimates the effective tax rate on more than $3 trillion in imported goods could rise to about 23%. That is the highest in more than a century.
Well, Nathan, President Trump's tariffs have drawn a sharp reaction on Capitol Hill. House Minority Leader Hakeem Jeffries spoke out even before the president's announcement.
This is not Liberation Day, it's Recession Day in the United States of America. That's what the Trump tariffs are going to do, crash the economy.
House Minority Leader Hakeem Jeffries. Republicans are mostly standing behind the president. Ashley Davis is a GOP strategist and partner at S3 Group.
He's ran on this for the last 4 years, really, is that he needs to make sure that the other countries are paying what they deserve.
Republican strategist Ashley Davis. But not every Republican is on board. Kentucky Senator Rand Paul says tariffs are just another tax on Americans.
Republicans used to be, and conservatives in particular, used to be against new taxes. I don't think it's going to be good for us politically, but it's not good for the country either.
Senator Rand Paul and 3 other Republicans joined with Democrats on a bill opposing President Trump's tariffs on Canada. The bill is not likely to pass in the House.
Well, Karen, President Trump's historic action risks inducing a worldwide trade war marked by tit-for-tat strikes. We spoke with Treasury Secretary Scott Bessent, who urged other countries not to fight back.
I would advise none of the countries to panic. I wouldn't try to retaliate, because as long as you don't retaliate, this is the high end of the number. And I think the market could have certainty that this is the number barring retaliation.
Treasury Secretary Scott Bessent went on to leave the door open to negotiations, telling Bloomberg, quote, "We'll see," with regard to further talks. You can hear the full interview with Scott Bessent on the Bloomberg Talks podcast and watch it on the Bloomberg Podcasts page on YouTube.
So, Nathan, let's get the reaction from other countries around the world. Our first stop brings us to Asia, where China has been the biggest target of Trump tariffs. And Bloomberg's Jill Desis joins us from Hong Kong with more. Jill.
Yes, well, I think it's, a lot to really digest here out of Asia. On the one hand, you do see those really high tariffs on China, this 34% increase that Trump is now putting on China. If you were to take that in totality with all of the other levies that Trump has put on China, that the U.S. has put on China over the last, several months, years, you're looking at somewhere in the neighborhood of the average U.S. tariff on Chinese goods being at least 65%, according to some economists. Bloomberg Economics estimates that as a result, that could lead to a 1 to 2 percentage point loss to growth in China. So certainly a big metric there that you're really looking at. Of course, we haven't really heard from China yet what their definitive actions will be to counter these tariffs. The Ministry of Foreign Affairs has said that there are going to be measures coming. We're just waiting to see them. But I would draw your attention, Karen, to elsewhere in Asia, where you're also seeing incredibly high rates and likely even, higher economic shocks. Vietnam, for example, they were hit with a 46% tariff in this latest round. I mean, this is a country that, is incredibly export dependent. They're among the world's most trade dependent nations. Their exports are equivalent to nearly 90% of economic output. I think that's why you're seeing such a big market reaction in that particular country today. So, just a couple of examples there, but obviously all across Asia, we're seeing a lot of different economic shocks just as nations respond and react to these tariffs that have just been announced.
Bloomberg's Jill Desis with the reaction from Hong Kong. Jill, thank you. Now let's head to Europe, get the reaction there. Bloomberg Daybreak Europe anchor Caroline Hepker is in London with the latest. Good morning, Caroline.
Good morning, Nathan and Karen. President Trump called the EU pathetic again, and that the bloc rips off the US as he imposed 20% tariffs on EU goods exported to America. The EU argues that America exports plenty of its services to the bloc and that it is the biggest single market in the world. Now, EU trade ministers are due to meet on Monday to discuss their response. Meanwhile, in the early hours this morning, Commission President Ursula von der Leyen warned that US actions would deal a blow to the global economy, and she urged further negotiations.
We have always been ready to negotiate with the United States to remove the remaining barriers to transatlantic trade. At the same time, we are prepared to respond. We are already finalizing the first package of countermeasures in response to tariffs on steel, and we're now preparing for further countermeasures to protect our interests and our businesses if negotiations fail.
Ursula von der Leyen speaking there. The tariffs could wipe out the growth forecast by the ECB for this year and in 2026. Markets now see another rate cut in April as likely. Bloomberg Economics sees the tariffs cutting EU goods exports to the US by half in the medium term. By comparison, here in the UK, we were dealt with a bit more leniently, a 10% tariff. Some, including business lobbies, see it as a benefit from Prime Minister Keir Starmer's pragmatic approach to the White House. The UK Trade Secretary, Jonathan Reynolds, has told Bloomberg just this morning that Britain is still confident that tariffs will come off. And yet, the US is inflicting pain on some of its closest allies. All told, it's more than just an economic shock. In London, I'm Caroline Hepker for Bloomberg Radio.
All right, Caroline, thank you. Well, early Trump targets, Canada and Mexico escaped the new round of tariff announcements. We spoke with Ontario Premier Doug Ford.
If that's the case, then I would highly recommend to the Prime Minister not to retaliate, and let's carry on a strong relationship. Let's build the AMCAN fortress, American-Canadian fortress, around both countries and be the wealthiest, most prosperous, safest two countries in the world.
Ontario Premier Doug Ford speaking with Bloomberg's Balance of Power. While no new tariffs were announced, other levies Trump has already imposed on Canadian and Mexican goods remain intact.
And Karen, while stocks are selling off around the world, the U.S. has been the hardest hit so far. S&P futures are down 2.9%, Dow futures down 2.4%, NASDAQ futures leading the declines now down 3.1%. Let's continue our coverage now with Bloomberg's John Tucker. John.
All right, Nathan, let's do the biggest losers in the U.S. These are the companies most exposed and that source a lot of their products from Asia, such as Apple. And some of its Magnificent Seven cohorts of the new tariffs will reach 34% for China. Apple still produces the majority of its U.S. sold devices in Chinese factories. India, where Apple's increasingly building iPhones and AirPods, that's getting a 26% tariff. And then there's Vietnam, where the company now makes AirPods, iPads, Apple Watches, and Macs. That'll be hit with a 46% tax. Now, Apple shares this morning in the pre-market down close to 7%. Then there's NVIDIA. NVIDIA, the most actively traded pre-market. It relies on China for AI chip sales. Those shares right now down 3.3%. Let's move on to the world's largest footwear and apparel companies, also facing a shock to their supply chains. Nike makes many of its sneakers in Vietnam, and Nike shares pre-market, they are down 8.4%. Lululemon Athletica, which makes 40% of its products in Vietnam, and 17% in Cambodia, tumbled almost 10% in late trading. Shares of Abercrombie & Fitch, they get 35% of their merchandise from Vietnam, fell 7.7%. And then Gap, which buys 27% of its goods from Vietnamese factories and 19% from Indonesia, that slid about 11%. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. Well, shortly after midnight, night, U.S. auto import tariffs went into effect. Meanwhile, one industry was spared for now, and Bloomberg's Lisa Mateo joins us with the very latest. Lisa.
Hey there, Karen. So let's start with the most recent change, the 25% tariff on U.S. auto imports. Now, it's expected to increase costs and disrupt industry supply chains. But what's more certain, auto parts will also be hit with a similar levy no later than May 3rd. And this morning, you already have Volkswagen already announcing it plans to add import fees to the sticker prices of its vehicles that are shipped into the U.S. Now, Volkswagen shares down about 0.5% in Germany. You have Ford off about 0.5%. General Motors down 1%. Tesla is lower by 3%. Chrysler parent Stellantis, it was down nearly 2% yesterday. This morning, it's up about 0.3% before the bell. The only good news is that imported cars and parts, well, they escaped the so-called reciprocal tariffs. And speaking of being spared, you have the pharmaceutical sector. It won this reprieve from sweeping tariffs. But here's the thing, it may not last long. Sources saying the White House plans to launch an investigation into the drug industry, other sectors, and that includes semiconductors and potentially critical minerals. And that could lead to tariffs under the Trade Expansion Act. Now, if we take a look at shares of Pfizer, they're down about 0.2%. Eli Lilly off about 2%. Lisa Mateo, Bloomberg Radio.
Lisa, thank you. All in all, it is an aggressive suite of tariffs from President Trump, and it will significantly complicate the Federal Reserve's job as it struggles to quash inflation and avoid an economic downturn. This morning, Morgan Stanley pushed back its call for the next Fed rate cut to next year. The firm's analysts cite inflation risks arising from tariffs. Fed Governor Adriana Kugler says it's appropriate to keep interest rates unchanged until upside risks to inflation abate.
I will support maintaining the current policy rate for as long as these upside rates to inflation continue while economic activity and employment remain stable.
Now, it was Fed Governor Adriana Kugler. The Fed's next meeting, May 7th.
That's news when you want it with Bloomberg News Now. I'm Karen Moskow.
I'm Nathan Hager, and this is Bloomberg.